Hey guys, David Robinson here. Welcome to the apartment investing journey. We've got another great episode for you today. Another great guest. We have Eric Chadderdon with us today. Eric, how you doing?
I'm doing great. Happy to be here, David. Thanks for having me.
So Eric went from top level salesman and sales leader to full-time multifamily real estate investor, growing from 0 to 368 units in his very first year. He learned how to maximize relationships, coaches, mentors, meetups, and even Shark Tank events to expedite his success on his journey to financial freedom through multifamily real estate investing. Eric, we always talk about on our show how our show is all about the journey. And so we'd love for you to back up and sort of talk about this journey that you've been on over the years, some of the background and backstory, and then how it all started for you as far as multifamily is concerned.
Sure. Yeah. I feel like the story is kind of what sets the path for you and whatever you're doing. And for me, it goes back as far as my family. I kind of grew up in and around real estate. Personally, I had no experience, but my parents owned 10 to 12 single family homes out in Oregon and two small multifamily buildings, a 26 unit and a 42. And so, as a kid, I was always, I had some exposure to it, but, I just wanted to play sports with my buddies and, hang out with my friends and stuff. And so I never really put too much thought into it. Looking back, I wish I would have paid more attention to what my dad was saying, considering this is what I do full time now. But what I did notice back in the day was that they were doing it completely wrong. And so they were self-managing everything, all their single family homes, all their multifamily properties. They were collecting the rents. They were fixing toilets, answering calls in the middle of the night. And, I knew there was a better way. And so in 2017 is actually when I first started looking into it. I didn't have the time. I was still consumed with my job at the time. But I knew that multifamily was something I wanted to get into. And so, especially seeing my parents were literally killing themselves. They were waking up at 6 a.m. every day, going to the apartments till 9, going to their 9 to 5, and then going back to the apartments every day till probably 8 or 9 p.m. And so, I was just seeing their quality of life, and it was just busy. I wish they would have had more time for them. And that was kind of what sparked my interest in this. And I kind of wanted to show that there was a better way to do this. And so that's what kind of sparked the journey. And that's kind of the background of it all. But then,
I'm curious
um,
before you take a step forward. I'm curious about that because a lot of people that grow up in a family where their parents were real estate investors and they see that sort of negative side of owning real estate and self-managing and the challenges that they face there. What was it that made you realize they were doing it the wrong way? What had you been, did you have someone else that sort of stepped into your world, or was it just learning about a different way of investing in real estate versus what you had been, seen from what your parents had done?
yeah, I had always heard this, the most millionaires are made through real estate is, I've always heard that. And so I was curious about it, but I knew that there had to have been a different way to do it. And I stumbled upon syndication, and tackling these large scale multifamily properties to where it can justify having a third party property management company. I just found it on social media. And so, I had heard about it through the internet and realized maybe this is the way that I can help set my parents free. Maybe this is the
Mm,
way that I can help them retire and stop putting in 14, 15-hour days in their 60s. So that was kind of what sparked it.
got it. Okay.
Yep.
And so that was roughly 2017 where you started like thinking and being exposed to real estate. Where did things go from there?
So yeah, I was exposed, but once again, I was just too busy in my job. I come from the direct sales space and I was in that for 12 years. And so, I was just heavily consumed in that. And I was running a solar company at the time and, just didn't, I was wearing too many hats doing that. I couldn't go all in on the real estate stuff, but it was always in the back of my head that that was something I wanted to pursue. And then it just came, I went to this workshop. I went to this, I joined a mastermind group. I saw this and purchased and jumped into a mastermind group and invested heavily into myself. And I would recommend that anybody else do the exact same thing because the amount of knowledge and skills that I've gained from just the networking and the education platform that I got was, it really propelled me in the right direction. But that's kind of where it all started. It was actually just October of last year, or not last year now,
Yeah.
because now it's 2022, but October of 2019.
Gotcha. Okay, so October of 2019 was when you went to that workshop and joined a mastermind. What did your world look like at that point in time from a professional standpoint? Did you cut off the direct sales business and the solar business, cold turkey and go straight into multifamily, or did you sort of overlap for a certain period of time? What did that look like for you?
Yeah, good question. As much as I wanted to, I knew it probably wasn't smart. Um, for about ever since like 2017, about when I first started recognizing that real estate was something I wanted to do. And I hate to say it, but I had been in that space for about, at the time, 9 years, or actually it was, yeah, about 9 years or so, almost a decade. And I was just full transparency. I was losing steam,
Mm.
and I hate to use the words burnt out, but man, it was that same feeling that you get when you wake up every day, and instead of being excited and happy to go to work, I was just not. And so naturally my performance started dipping slowly. And I realized that was a huge red flag. And I was like, man, I either need to make a change or I'm going to keep trending in a down direction. And so that's when I realized I needed a new challenge. I needed something to push me and stretch me in ways that I hadn't felt in multiple years. And so that's kind of what kind of sparked it. But what I did is I didn't just quit cold turkey. I needed to still have the income. At the time, I actually had quite a bit of debt that I had built up, and I had paid off quite a bit, but then I put myself right back into that, high level debt situation by paying for the mastermind group. So that, it was a significant
So,
investment.
so let's talk about that. There's a lot of people that, start to explore getting into the space and they hear that, hey, joining a mastermind group or a coaching or a mentorship program is a great way to get started. They start digging in, and then they see the ticket price to buy into one of those programs, and it's not a few $100s. We're talking in many cases 20, 30, 40, $50,000
Sure.
investment. What was your mindset around that, especially considering the circumstance you were in, where you had dug yourself out of some debt, but you were about to go into more debt to get yourself into one of those programs? What was the mindset? Because I think there's a lot of people that could potentially relate to that.
For sure. I was full of fear. I was shaking, man. But I knew if I didn't do something, I'd be doing the exact same thing next year and the year after that. And I knew that for the only way for me to take any sort of action was to put myself in an extremely uncomfortable position, like I said earlier, to stretch myself and challenge myself in ways I hadn't felt. And that was the only way I knew how to do. And I just wasn't, I didn't know of another way. So I was like, you know what? This is going to put my back up against the wall, and I'm either going to fold or I'm going to rise to the occasion. And I, I ended up rising and participating and surrounding myself with some phenomenal people that really helped in my journey. But yeah, I was scared out of my mind to make that investment. But, I also knew, like, I looked at my track record of things I'd done in the past, whether it comes to sports, my education, my previous jobs. And, I had a trend of success. And so I just had to like take a step back and, realize who I trusted and, think, do I trust myself? Do I believe in myself? And, I knew I wanted to surround myself with people that would believe in me as well. And when I went to that first, event, I felt like those people had all the belief in me and saw a lot in me. And, and so it really kind of sparked some confidence. And that's when I made the jump. But I didn't fully jump out of my other job. I stayed doing that for quite some time until I actually closed my first deal. So it was probably 7 months or so. I continued doing both. So I was still working full time doing solar, but I was just putting extra hours in the morning and in the evening.
Love it. Love it.
Yep.
So let's fast forward.
Okay.
And why don't you take a minute and tell us what your business looks like today and what you focus on? And then I want to bridge the gap between October 2019 when you wrote that check to get into the mastermind group, and how you got to where you're at today. So if you can, tell us a little bit about what your business is focused on, what you do, and tell us a little bit about your business.
Sure. So now what we're focused on is 2022 new goals. We went, from 0 doors in October 2019 to now having 368 units, as you said. We've done 2 large deals, a 224 unit in Fort Worth and 144 units in Houston. And so really that just opened our eyes up big time to the potential and the capabilities of what we can do. And, it's kind of crazy, but they say that the rule of this industry is once you get the first deal, things kind of start snowballing. And that was for sure the truth. After the first one, we got an LOI accepted on the second one 10 days later. Then we closed on that one in November. And so, but yeah, that's kind of where we're at as far as my role and what I focus on. I was lucky enough and blessed enough to find 2 other team members that have skill sets completely different than me. And so, I was in this for 2 months before them. So as far as education goes, I got a really strong foundation in all aspects of the business, but it allowed me to realize what I do and don't want to spend my time doing, because there is a lot of things to be doing on these deals. And so, I realized, I need somebody that is really good at numbers. I can underwrite deals for sure, but I would rather, my partner, Brett, I would rather pass a deal to him, because if he had it his way, he would be behind a computer crunching numbers, making sure, vetting a deal properly. I crave social interaction. And so I love networking events and multifamily meetups and these big conferences. I love those. If Brett never had to go to any of those, he'd be the happiest guy in the world. And so finding people that complement your skill sets with, different skills is very important. So Brett does our underwriting and acquisitions, broker relationships. Megan Davenport, his wife. So by the way, side note, I brought my fiance's parents in as my partners,
All right.
which I was hesitant on at first.
Brave.
I know I was very hesitant, just because, obviously our relationship comes first and all of that, and family first. But, we kind of tested the waters for a couple months, and, we were just working really well together. And, it had to work, because if it didn't, then maybe I wouldn't be marrying their daughter. So it has worked out phenomenally. They're amazing partners, and we work really, really well together. So we are the definition of a.
Is Brett your fiance's father, and is Megan your fiance, or your fiance's mother?
My fiance's mother.
Okay, perfect. All right. So Brett and Megan, your fiance's parents, are your partners in your business.
Correct. I brought them in about 2 months into my journey, just after realizing how much goes into these deals. Megan does our asset management. She's got over a decade of experience in asset management and construction already. So that kind of played perfectly into her role. And as far as the rest of it, I do investor relations, capital raising, content creation, social media, marketing, stuff like that. And kind of all of that falls under that umbrella. So
yeah, that's great. And so so now that we have and what are you guys focused on moving forward?
We're focused on, we'd love to tackle between 750 to 1,000 doors in 2022. We just want to, basically what we want to do is increase our investor base and be able to tackle these deals a lot easier. If anyone's even tried doing a raise before, it can be really difficult. Our last one was $7.3 million, and it was a struggle for sure. It did not come easy. At first there was like the first 2-3 weeks came pretty simple. We were using our resources, tapping into some investors. And then when those went away, there was a solid, and this is in like peak time when we're trying to close the deal, there was a solid 2 to 2.5 weeks where we didn't have 1 cent come in. And it's like, whoa, are we going to be able to raise the rest of this? And then we figured it out, started doing quite a bit. And then that Shark Tank event happened. That was huge for us. That was put on by RE Mentor in the Dallas area. And they hosted a Shark Tank event with a 9-person nine panelists that were expert operators. And they sent out an email prior to the event. And, they were basically said, hey, we're hosting the Shark Tank. The first, X amount of people to respond get to present to the sharks and everybody in the audience. And I was like, okay, boom. Sent to over the T12 rent roll, our investor deck,
Hey,
everything, our underwriting. And
Eric, back up just a little bit. You started to cut out right as you started to talk about the event and when
okay.
you responded to their request. So they sent out this notification about the event and said, "Hey, the first few people that respond will have an opportunity to present to the panelists, to the sharks, and to everybody that's at the event." But go into that a little bit for us.
Yeah, so they sent out this email, and I saw it as an opportunity. We're in mid raise here, so I was like, maybe this is an opportunity to raise some capital for our deal, and it for sure was. And so we went to it. I responded right away with the T12, the rent roll, our underwriting, our investor deck, everything, and they selected us. I responded probably within 2 minutes, and so we got the third of 4 spots. And there's probably, I don't know, 700 people at this event. Maybe not, maybe somewhere around there. There was a lot of people. So anyway, we took that opportunity. We went and did a phenomenal presentation. The first guy, he got one of the sharks interested in the deal. The second guy was amazing. His company was called 7 Foot Finance, and he was 7 feet tall. He was an ex-NBA player. Yeah, he is a phenomenal presenter. His deal was in Louisiana. He got a few of the sharks, I think 3 of them that were pretty interested in the deal. And then when we presented, we got every single one of them, all 9 interested except for 1. And the only reason was because his deal criteria, he only does deals 250 units or above. And so anyway, we weren't really looking for a shark. We had all our pieces put together for the deal. So we kind of were tailoring our presentation to the audience, see if there's any passive investors there. And, we left and people were coming up to us left and right at the event, asking for more details in the deal and wanting to be a part of it. We probably raised from just that event in 24-hour period, probably close to $700,000 or $800,000.
Oh, that's great.
So
Interesting.
that was,
So that's
yeah.
that's a unique, and granted, it happened to be the right timing for you, where you were in the middle of a raise, the event pops up, you take action, you get out there and you make a great presentation, you bring it in. But that's an exciting little story. So moving forward, what are you guys focused on from a product perspective, geographic location perspective, and what does that look like for you?
Yeah, so we live in Texas. We're focusing on deals pretty much in Texas right now. We would be open to expanding to maybe a Tampa market, a Florida market maybe, or the Carolinas maybe. But really, we spent so much time building strong broker relationships out here that the deal flow is just really kind of through the roof for us right now. So we'd be doing more deals if we had more capital. So we're focused on raising more capital, building our investor base quite a bit more, tackling those C plus to B properties, and B type areas, those value add type deals. Those are what we're looking for. 100 plus units, anywhere from 100 to 300 units is what we can handle. And we have some strategic partners we'd bring in if it was, on the higher end of that side.
Love it. Love it.
Yep.
Okay, so let's go back then and let's talk about one of the deals that you've closed on. And I think we're going to chat about the 144 unit property in Houston. So maybe just give us a brief synopsis of the asset itself.
Yeah, so I guess did you want to hear any of the backstory between 0 to that point, or?
Oh, yeah, for sure. Yeah, tell us a little bit about that.
So, and I mentioned that just because I feel like it might be important for anyone maybe listening. It was a tough journey, and we went 7 months without making any progress. We submitted probably 24 to 25 LOIs, made best and final on I think 7 of them. And I say that because part of the reason I want to bring this up is I think it's extremely important to build your mindset up before jumping all in with this thing. Really building that strength up, because you'll get knocked down. And like I said, I come from the sales space, the direct sales space in my previous career. So I can handle rejection pretty well, but you're going to probably lose more deals or pass on more deals than you get in this space for sure. But even me, I was pretty beat up after seven best and finals and losing every single one.
Yeah.
It can be mentally and physically draining to do all the prep work. And, we pretty much do and prepare a deal, our entire business plan, everything before we're submitting our offer. So there's a lot of work, market research, our underwriting, everything going into these deals. Sometimes it's, when we first started, it was weeks worth of work. And so now we're quite a bit more efficient. We can vet these things quite a bit quicker. But at the very beginning, some of these, just to figure out if we wanted to pursue it, take 2 or 3 weeks. It was a lot of work. And so, but, I bring that up because if I would have quit at the 7th one, I wouldn't have gotten it on the 8th,
Yeah.
And so we spent that whole year building just really strong broker relationships. And that's how we got that 144 unit deal. It was an off market deal. The seller and his son were just exiting the value add game, getting into development. And so they were just looking to exit that kind of space. And it was an off market deal. Kind of how it happened was the broker brought it to us. The broker honestly promised us the deal before, and he told us that our other LOI was going to get accepted, but the seller ran into a different group touring the property the same day that he was supposed to sign our LOI, and he took liking to them. And they got FaceTime with him, and so it's kind of hard to beat these days. So he ended up picking them. And the broker had told us that we won the deal, we'd have the LOI by the next day, but that didn't happen. So anyway, he brought us this one right away. We kept good relationships with him regardless. And
so was that number 7 was the one that he said, hey, you missed out on it and then he brought you this deal. Okay. Great.
Correct. Yep.
Okay,
yeah.
Cool.
So that's how it happened. He brought it to us. We vetted it really quickly. He's like, hey, I'll give you, whatever, 48 hours to check this thing out before I send it out. And you have to take things as they come and try to find the positive. And honestly, it was probably a big blessing in disguise, because this 144 unit that we did in Houston was a phenomenal deal. And we were really happy. Our investors are happy with it as well.
So tell us a little bit about how you, so this is a 144 unit deal in Houston, Texas, the southwest side of Houston, Texas, a C+ property in a B area. You mentioned in the show prep notes, the purchase price was 13.2 and total raise was 7.3. How did you structure this deal? Was it a 506B, 506C?
We were trying to contemplate which one we wanted to do, but we did a 506C on it. Without us having a massive investor base to pick from, we were like, what, we need to be able to advertise this thing. And so we chose a 506C.
And it came out to be very critical that it was a 506C, because was this the deal that you used with the Shark Tank event?
It was, yes.
So yeah, that was critical, right?
It was crucial in this deal, like extremely. And so I'm glad we went that route. Definitely really glad. That was big.
So it was a 506C. And just for our listeners that may not be aware, these deals are regulated by the SEC, and the Regulation D 506C allows sponsors to raise equity from accredited investors and allows them to advertise to attract that capital. 506B restricts sponsors from advertising to the general public. They can only work with accredited investors and a limited number of non-accredited investors, but there needs to be a prior existing relationship there. So that's the difference, and why the 506C structure was important to Eric's deal here, and allowed him to actually go and present at this event and attract investors that he didn't already have a relationship with. Just wanted to point that out. And so the total raise on this was 7.3. You alluded to that earlier, and you had a budget of 1.1 roughly for capital improvements. What was the business plan?
The big thing was, the previous owners had done a decent job maintaining the property. They just dumped in 2015 about $750,000 into, CapEx and into the exteriors of the property. So it looked pretty good on the outside, which is actually great for us, because majority of the work that we needed to do is on the interiors and unit upgrades, which is great because that's where we can increase our NOI by doing those, increasing it to a premium product and achieving those higher rents. There's, based on the comps in the area, it was significantly below market rates already. So really, if we can just come in and compete, and then on top of that, make the units even better, it's definitely a slam dunk. There was some new Class A type properties that went in less than a mile away. So people in the area are willing and able to pay the higher amounts. We were just super excited. Occupancy was high. It was at 96 when at takeover, 96%. And I think now it dropped to like 94. We're still in the mid 90s. So things are moving.
And from a debt perspective, what kind of debt were you able to get on it?
Yeah, we got a Fannie loan on this one. So we were happy to get that Fannie card. We got just a fixed rate 10-year interest only loan with Fannie.
Okay.
So,
and did you bring another key principal into the deal with you, or how did you guys? How were you able to obtain the debt?
Yeah. So, and this kind of goes back to the journey. When we were losing left and right, I felt like we needed to and getting those offers rejected, I felt like we needed to shift and try to make some strategic partnerships. So what I was doing was just trying to add whatever value I could to other people. And, in our mastermind group, they were offering for us to come help out and just watch and shadow, do some due diligence. And so I did, and I just offered my help as much as I could, and ran into one of their partners during that day that was on site, and they took a special liking to me. And there's a couple out of North and South Carolina. They have over 3,000 units. And I saw it as a phenomenal opportunity to build a strong relationship with them. And I did. And I was grateful for that because like I said, they took a liking, and they actually asked me after. They said, "Hey, do you have a direct mentor you're working with that's kind of showing you the ropes?" And I was like, well, if you're offering, I do now. And and I just saw it as like a perfect slam dunk. And, these people that are doing phenomenal in this space, they've been in the multifamily space for 14 years. They wanted to work with me, and they saw something in me, and that built my confidence up. And, I cannot tell you how fortunate and grateful I am for Lisa and Greg Parrish. They're GLP Investments out of North South Carolina, and most of their portfolios in the Carolinas, but now we're basically their boots on the ground for any Texas deals we do. But they have been just a wealth of knowledge. They've definitely expedited my success and my path in this industry significantly.
Yeah, that's huge, having that type of connection, and good on you for recognizing, a way for you to build that relationship and try to add some value to them. So let's close the loop on this deal. Where do things stand with the deal today?
Oh, things are going great. Yeah, we're still right in the mid 90s for occupancy. We're just in the process of, it just happened in November. So we're just about a little over a month in, month and a half in, and we're starting to get ready for the first unit turns.
Cool.
So we've just done some rebranding. We've just, been keeping up with all of our investor relations and sending them up the updates on the new branding. We changed the name to the Oasis. So it's definitely beautiful. We did some new signage, and now we're just going to be starting with the unit upgrades.
That's great. And was there anything, obviously it sounds like there was a lot that went right with this deal that you've outlined. Was there any challenges that you faced in the deal, or anything that went wrong that we could learn from?
Yeah, this was just a slam dunk of a deal. It was all really easy, but there was one pretty big mistake that I made. But I was actually going to talk about that for the next segment. But I'll tell you now. Basically, the biggest. It was tough. It was a big learning lesson. And, I'm a year into this thing, just 13, 14 months in, and I'm still learning new stuff every day. That's why I surround myself with people that are better than me, so I can learn from people that are smarter and have done and been through things I haven't. But this particular situation, we raised $300,000 from an investor that we were putting towards the EMD, the earnest money deposit. And, I hadn't communicated with them for about a week and a half on when it was due. But, I told them, hey, we need to have this in by next Wednesday, make sure if things are, funds are liquid. And I didn't talk to them from that conversation until the due date. And this is the final date. And we're about, the funds need to be there today. And so I'm reaching out to them, and I'm saying, hey, are you guys ready? basically to make this transfer for the EMD. And they're like, well, no, we're not. We hadn't heard from you. We're not. We need to move some things around. It'll take us a couple days.
Mm-hmm.
And I was like, oh my gosh, I'm sweating bullets. I'm like, because if there's a lot on the line, this is months of work, not just for me, but what I felt bad was it was for Brett and Megan. It was for my sponsors, Lisa and Greg Parrish.
Sure.
All the countless hours that we had put in, on the phone, and all this work, the broker relationships, the lending relationships, all this stuff was on the line, and this was about to fall through. And quite frankly, this is probably the most I've beat myself up in a long time. I'm usually pretty dang positive, but man, that was a big mistake. And I am extremely grateful once again for Lisa and Greg, because what they did is they covered it from their own pocket, so we didn't lose the deal. But you have to look at it and learn from things. And so I looked at it and, I was like, okay, what can I learn from this? Well, I will definitely be a much better communicator with however that EMD is coming in, and just with investors in general.
Yeah. Yeah. Great learning experience. And luckily you had a great partner that could step up to the
Luckily.
plate. Yeah.
Yeah.
Well, Eric, this has been a great conversation. I love your candor, and you're obviously out there, someone who's sharp and bringing value to other people, and winding your way through this multifamily space. And you've done an incredible job of that in a very short period of time. I want to start winding down our conversation here, but I've got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business?
I would say one of the biggest challenges is, figuring out when to scale and when to hire things out. But it kind of goes back to the very beginning. One thing I wish I would have done from the very start is been more vocal about what I'm doing. Call it whatever it is, call it my own insecurities or whatever. I didn't want to post on social media until I had a deal, until I was succeeding. Maybe that's my own issues from coming from the sales world, but, and recognition and this and that. But I was afraid to post my losses, I think, because I wanted people to see me winning. And man, was that wrong, because then when I did finally post my deals, it almost discredited me, because people that knew me, they were like, wait, you were just the solar expert, the solar guru. Now you're all of a sudden this real estate guru. What the heck?
But they didn't know the amount of time that you had spent digging into the space, putting effort in. Yeah, that's a great point. I'm glad that you brought that out. That's something that a lot of our listeners can learn from, that you were afraid to post about your losses on the journey because you wanted to have the perception of winning in the space, but it really potentially held you back from being able to raise more equity when the deal was there, because you hadn't been active in the space and letting people know about what you were doing.
You're hitting it on the head. That is exactly what happened. And, I in the solar industry, there's people that make a lot of money, and people that I knew would be interested based off of my track record and our relationship and investing in my deals. But because I didn't do that, I didn't have the credibility, and it just happened to them. It happened overnight. But to me, I'd been working on this stuff for 9, 10, 11 months now. And, like I said, it discredited me for sure. So what I did is I took a step back from speaking to the people that I knew, and I just focused on new contacts, new investors, and focusing, moving forwards. And I just told myself, I'm going to build some credibility back with the people that know me, and start posting wins, losses, and everything moving forwards. And after maybe 1 or 2 deals, maybe they'll start coming to me, and which has actually proved to happen now that the second one's been closed.
Yeah. Yeah.
So
great. That's a great little insight there. What's something that you're absolutely crushing right now in your business that we could all learn from?
I would say one of the biggest things is building relationships. I think that this is definitely a relationship business. And if you can focus on adding value to other people, and then it can really propel you forwards. But one thing we're doing really good is we're getting out there, and we're putting ourselves out there on, social media, but really in person as well. The world's opened back up, and some of the southeastern states that we're over in, and there's you could look up and go to a networking event every single week if you wanted a multifamily meetup, different meetup events from different groups, different conferences. There are a bazillion opportunities to go put yourself out there and connect with people, and I feel like we've done really well. We went to several events over the past 6 months, and we this year going into 2022 we set aside a pretty big budget just for us all to go attend as many events as we can go to, because not only did we raise capital at them, but you just never know who you'll run into that you could help and add value to, and they could do the exact same for you.
Absolutely.
Yep.
Eric, what's the best way for our listeners to connect with you and learn more about what you guys have going on?
Yeah, people can reach out whenever. Best way is probably either social media, Facebook, LinkedIn. Those are my main two platforms. But also, if you want, you can see it here. Here's my email, eric@gibbiescapital.com, or you can go to www.gibbiescapital.com and you can learn more about our deals, join our investor club, or just get our contact info and reach out whenever.
Awesome. Well, Eric, thank you so much for coming on, sharing your journey with us, giving us some insight about your background and the transition in the space, and talking about, that first few months, close to a year of really grinding it out and having a bunch of losses, but, keeping that mindset, even though, I'm sure it was still, you mentioned it was a struggle, but trying to keep that positive mindset, because you lost 7 times, but the 8th one was a win. Turned out to be a great deal, that 144 unit deal in Southwest Houston. Congratulations on your success. We'll have all the links to Eric's contact info in the show notes here. So if you're listening and you want to connect with Eric and his team, just go down to the show notes, click on one of those links. Eric, again, thank you for sharing your time with us, and we look forward to connecting with you again soon.
Thanks again, David.